Hi, my name's Phil Grove, and I'm a real estate investor. And we're here to talk about the different strategies that are available to homeowners for selling a home. Now, I work with other real estate investors and realtors all across North America, and together we collectively offer pretty much every solution you can imagine for buying or selling real estate with just about any seller in just about any situation. And we're going to go through in this brief video all of the different options and trade-offs that a homeowner today has for selling a home. And hopefully this will allow you to make a better decision as to which option would be best for whatever your situation is. Now, I can tell you that I've worked in a lot of different real estate transactions with a lot of different buyers and sellers, and I know a little bit about real estate. One thing I know about selling a home, for example, is pretty much everybody wants exactly the same thing. Everybody wants to sell their home as quickly as possible, and everybody wants to sell their home for as much as possible. And I can certainly understand that. I'm just like everybody else. But the truth is, when you sell real estate, it doesn't always work out that way. I always like to say that selling real estate, selling a home these days is kind of like winning the lottery, right? You can get the $1 million, but they pay you out over time. Or you can say, I want the lump sum, I want it right now, and you get it right now, but it's a lot less than $1 million. And when you sell a home, you've got a lot of different ways you can sell the home too. Some of them are quick, but you get less money. Some of them you get more money, but it takes time. Now, fortunately, there are many different strategies in between as well, and some creative strategies as well. So we're going to go through all of the different options that today's homeowners have to sell a property so that, again, you can see what the different options are and make an informed decision as to which option might be the best for you and your situation. So before I go through these different options, I do need to make a few assumptions. And I'm going to make some assumptions about, values and things like that by just, explaining all the options for a generic house. So we're going to just pick a generic house, say a $150,000 house with generic situations. And I promise whether your house is worth $50,000 or $5 million, you can just adjust the numbers up and down and plug in the numbers for your particular situation to see which option would work for you. But the math is the same regardless of what your house is worth, and you'll understand that better as we go through this in a little bit more detail. So for our assumptions, for the house we'll explain our different options for, let's just assume we're dealing with a $150,000 house. So the fair market value is $150,000. And that's the current fair market value, by the way. I mean, sometimes people say, well, I bought it for, $200,000 or $100,000 or whatever it was. Doesn't matter what you bought the house for. It doesn't matter what it used to be worth. Doesn't matter what the appraisal said, 6 months ago or 2 years ago or whenever. The thing you have to look at first and foremost is what is the current fair market value? What would somebody reasonably pay today for the house? So the first thing we look at is current fair market value. So for the house, we'll give, in our example, we'll look at a $150,000 home. And then we have to look at what is the balance of all the loans? How much is owed on the house? So for our example house, we'll say that they owe $155,000. Now, whether you owe a lot less or a lot more, in other words, whether you have a bunch of equity because you put a big down payment down or you've had it a long time, or if you have a lot less equity or a lot of negative equity because the house went down in value since you bought it, again, it doesn't matter. You're going to be able to adjust, everything to your situation. But I'm just going to use, again, this generic example so that I can go through these different options. And this is the example I'm using happens to be the most common, home in America right now, and that's kind of why we're using it in our example. So for repairs, we also have to estimate about how much repairs the house needs. I'm going to assume the house needs, negligible repairs. Let's say $5,000 in repairs. If your house is in perfect condition, needs 0 repairs. Again, it doesn't make much difference. It's pretty uncommon nowadays that I don't see a buyer that after they do their inspection finds at least $5,000 worth of repairs. They always want, new carpeting or, something fixed or whatever. So $5,000 repair allowance done by a buyer would be pretty much cosmetic, pretty negligible. But again, that's just in our example. You have to think about what your situation is. And then the last assumption we're going to make is that this is if you sell it normally, then normal closing and sales costs apply. In other words, the cost to sell a home, when you close it, costs about 2% in closing costs, about 6% real estate commissions, and nowadays you're going to have to pay about 2% of buyer closing costs. So the entire cost of sales, the cost to the seller to sell a house, is about 10% of whatever the offer is from the buyer. So those are our assumptions, and now again that we have those assumptions, let's go through all the different options for selling a house assuming those assumptions. And again, what you can do for whatever your situation is just write in your actual numbers, and I'm going to explain all the math so you can figure it out exactly which option would be the best for you for your specific situation. The first option we're going to talk about is selling your home to a cash buyer. If you want to sell your home quickly, and most people do, one of the very fastest ways to sell a home is to a cash buyer. And let's go through the math for a cash buyer. The cash value of a house, if you ask for somebody to buy your house for cash, and there are cash buyers out there, and in general what a cash buyer is going to want to pay is about 70% of the fair market value minus repairs. In other words, cash buyers tend to be real estate investors, and what they're looking to do is buy houses so that they can flip them. And when you add up all of the cost to flip a house, the buyer is going to have to pay closing costs on the purchase. They're going to have to pay acquisition costs, carrying costs, insurance, and payments, interest, taxes, utilities for however many months it takes to buy it, maybe make repairs, put it on the market, and ultimately sell it again. Then they're going to have to pay closing costs again when they sell it. And most people that flip houses, they buy wholesale, but they sell retail, so they're going to have to pay commissions again. So the total cost to flip a house is about 15% of the value of the house. And so when a cash buyer buys a house, they generally will pay about 70% on the dollar because they expect to have about a 15% overhead, and they expect to have about a 15% profit margin. Now, I am a cash buyer, and all of my investor associates are cash buyers, and if the cash offer is an offer that is attractive to you, we can certainly talk to you about that offer. For our example home, a $150,000 house with $5,000 needed in repairs, 70% of the fair market value, 70% of 150 is 105,000 minus the repairs is 5,000, gets the offer down to about $100,000. That's what the cash offer would be on a home. Does this hurt your credit? No. You can sell a home to a cash buyer and there's no impact on your credit. How long does it take? Well, that's the good news. It takes very little time to sell a home to a cash buyer, typically a few weeks. Most cash buyers, we advertise ourselves with We Buy Houses signs. We can generally buy a house in even under a week, but certainly less than 2 weeks. Of course, the downside of a cash offer is, in our generic example, the seller will have to bring to the closing the difference between the loan amount and the offer. In this case, that would be about $55,000. So this is an option that is very fast, but depending on the amount of equity you do or do not have in the home, it's going to basically give you the least amount of money, or if you don't have much equity, it would cost you the most. So this is the lottery example.